Interlay has launched the Bitcoin IBTC, a wrapped Bitcoin token. The wrapped token allows Bitcoin to be used for decentralized financial applications on Polkadot via a bridge. Around 2% of all Bitcoin has been making its way onto Ethereum, Polygon, and Solana, and more blockchains as wrapped Bitcoin, and has seen nicely and steadily growing. What do you think are the driving factors?
So Bitcoin is by far the largest asset in terms of global adoption. And with the current instability on the global and especially some local financial markets, Bitcoin is seeing even more demand from end users as a way to avoid and escape from fiat currencies that are currently unstable or subject to high volatility and specifically inflation. And the recent push by large companies, institutions, recently BlackRock announcing, and there's been dozens of others, plus a few governments exploring Bitcoin as legal tender or allowing specific purchases and so on, I think that's another factor why we see more and more adoption and more demand. The challenge, however, is that Bitcoin cannot be used for anything else than payments in a decentralized manner, right? You can pay Bitcoin, and that's fully decentralized on the Bitcoin blockchain. But the moment you want to do trading or more sophisticated things, you have to go to a centralized provider, right? And this is why WBTC and wrapped assets on Ethereum are so popular, because once you bridge BTC over, you can use it in hundreds of applications in DeFi, and just without KYC, without having to go through complex processes, without having to use VPNs and so on, right? You can really have financial freedom. But the problem with these BTC bridges actually is that they're basically all centralized still, right? Mm-hmm. So, and I think that makes them barely better than exchanges. And in fact, I think it's worse. And the reason is when you go to a centralized exchange, you know what you're signing up for, right? You know it's a centralized exchange. You can check its reputation. You may have some legal ways to recover funds if something goes wrong. But when you're using WBTC, right, the centralized wrapped Bitcoin in DeFi, you're actually, it seems to you that you're in DeFi, but you're actually not. You're actually trusting the centralized custodian who minted the WBTC and who's holding your Bitcoin to actually not lose or not confiscate or seize the BTC. And we've seen recently with all the bridge hacks and so on that centralized bridges are dangerous. And this is exactly what Interlay tries to fix. So our mission is to really allow you to use Bitcoin and cater to this demand in a decentralized manner.
Bitcoin is very important. But why do you think Bitcoin is so important to DeFi? Because, for example, Ethereum DeFi, they have Ethereum, Polkadot DeFi, they have a DOT. That kind of works very well. And why we have to bring the Bitcoin to DeFi?
There's multiple reasons. There's a financial aspect. Bitcoin is by far the most liquid market, right? So if you look at CoinMarketCap, CoinGecko, it's very clear. Bitcoin is number one. It's the most traded asset. It has the most liquid markets. And it's the easiest way to onboard into crypto, right? Sometimes it's difficult if you need to buy some specific tokens. I mean, obviously, Ethereum has a huge market, obviously. But if you go into more smaller chains, it's sometimes hard to get the native assets, or like if you go to like parachains or like Cosmos Change, where you have like a lot of small ones, it's sometimes tough to get the actual local token to pay for fees. And Bitcoin, you always have a market. So that's kind of one way to onboard. And that's why it's also good for financial products, because it has a lot of liquidity. And if you just look at the liquidity side, bringing even a fraction of Bitcoin's liquidity and trading volume onto DeFi, moving it off centralized exchanges into DeFi will help bootstrap and boost growth of the entire Web3 ecosystem. And the second reason is that Bitcoin has more than just financial power. It has political power. Bitcoin is very simple. It doesn't do much, right? But what it does very well. It's payments. It's the most secure, most decentralized network. And arguably, like if I've been following quite a few like opinion leaders on this and like looking at security, the current consensus seems to be that Bitcoin is probably the only one that could withstand attacks by larger players, governments, and so on over the next years, right? Everything else is still in progress. Ethereum was a big network. Now it's doing the merge. It's not quite clear what's going to happen. And the other networks are still just growing. So Bitcoin is probably the only one that can survive a massive regulatory crackdown. And combining these factors makes it so important to unlock new use cases for Bitcoin and get DeFi users access to BTC.
And IBTC creates a way for DeFi traders and the other Polkadot network users to gain exposure to Bitcoin without needing to set up a native Bitcoin wallet and infrastructure. You've already shared that Bitcoin have political reasons for adoption, and also it is very important for DeFi. And could you share the ideas of what BTC is capable of on Polkadot?
So initially, IBTC will serve two main use cases for Polkadot. One is this on and offboarding. Instead of having to always go through a centralized exchange or a trusted bridge, like, for example, Nomad or Multicoin, multi-chain, you can now enter Polkadot's ecosystem and exit through Bitcoin, right? A lot of people, DeFi users, like nearly everyone has Bitcoin, right? It's like Bitcoiners, like Bitcoin maxis, they have Bitcoin, and some of them also have like other assets. DeFi users, nearly everyone has Bitcoin, right? It's just how people get started. It's the easiest way to enter the ecosystem. And now we allow you to enter into Polkadot from the Bitcoin side, right? That's kind of one aspect. And the other one is financial products, right? Our goal is to create a suite of tools for Bitcoin users or DeFi users who use Bitcoin to buy, sell, borrow, lend, and also hedge BTC risk. So basically the standard tool set that when you use financial products, you would like to have that. And this will happen, the financial products that will happen in two initiatives. One is integrations, right? The goal is to integrate with all major Polkadot parachains by the end of this year and then keep extending beyond that in 2023. We are already connected to Akala and Moonbeam. A-Star and Parallel are already being finalized as well. And the focus here will be to unlock specialized use cases, right? Each of these chains specialize in certain things. Some of them provide EVM compatibility like Moonbeam. Akala has a stablecoin. A-Star has lending and liquid staking. A-Star has a lot of dApps being built on top of it. And the goal is for us to identify on each of these platforms what's the best specialized use case for Bitcoin, like the best AMM, the best lending platform, the best way to use Bitcoin in a stablecoin, the best way to also use Bitcoin with Ethereum-like tooling, because we know that Ethereum tooling is pretty good, right? And then in parallel, we will be building our own set of products. These will be simple, easy to use. They might not be the best like EMM, the best lending platform, but they will be natively usable with Bitcoin. So when you come to Interlay, you have two options. Either you use that you quickly can trade, buy other assets from Polkadot with BTC, and basically do some borrowing, lending. You can then hedge some risk and so on. Or if you want to go specialize, if you're a DeFi active power user, you can then go to all of these native ecosystems with one click and start using it there. So kind of there's a split between beginner users or like users who don't actively trade that much, who just want a little bit of exposure. And this is a very, very big group, right? Retail users are the largest user group by far. And then we will try to help them on our platform and really provide easy onboarding from Bitcoin and very easy services for them to use, and also direct integrations into Bitcoin wallets. And for the DeFi users, you will have an easy way to then hop onto Moonbeam, Akala, A-Star, and also other networks with time to really go in depth.
Great, amazing. The vault, collateral, and other factors make IBTC different with others. And I know that, Alex, you have been working on it since your PhD program 5 years ago. How do you come up with the idea and really bring it to the world in the end?
So it has a bit to do with Bitcoin's history and the whole debates and political kind of internal debates around how to change Bitcoin. When I started working on Bitcoin back in 2015, early 2015, that's when that's when the first scaling debates started coming up. You started talking about making blocks bigger, doing side chains, or then that first payment channel mechanism, the first time Lightning came up was around that time. And there was a lot of discussions about SegWit and using that and introducing SegWit to Bitcoin. And then you had the Bitcoin Cash Fork and Bitcoin ABC. And all of these things were trying to change how Bitcoin works. Some of them better, some of them worse. And I was always interested in what else can we do with BTC, right? It's not just payments. That's clear, that's solved. It's like Lightning is a good solution for fast transactions. The usability is difficult, but it works. But what if I want to do more? What if I want to have more complex, more sophisticated interactions like in today's financial system? Right, our financial system is not only payments; it's so much more. During my PhD, after working a lot on trying to build stuff directly on Bitcoin, we realized, okay, well, let's try to move Bitcoin to other ecosystems. When I started the PhD in 2017, by that time already Ethereum had been launched, it had taken off, and it was kind of seeing adoption, and it became quite clear, okay, there will be a lot of other things than Bitcoin that will be successful. Smart contracts definitely have demand. There is a whole ecosystem that wants to build on this. So the goal was to avoid the political debates and avoid maximalism on both sides and just say, look, you can take Bitcoin and you can move it to Ethereum, to Cosmos, to Polkadot in a fully trustless manner. Because if it's not trustless, then it's not Bitcoin anymore. Then there's no point of using it. Then you can use just a synthetic asset. You just bet on the price, but you never really have Bitcoin. And together with my co-founder, Dominic, we kind of came up with this idea of using this decentralized and collateralized model. And then we basically presented it first, actually, the fun part here, we presented it first to actually Bitcoin developers at scaling Bitcoin. So the first people to actually listen to this and be interested was the Bitcoin community. And then we went on to share with Ethereum and Polkadot. And in the end, we're then approached by the Web3 Foundation, who suggested that we build this on Polkadot. And that's basically how Interlay was born.
Amazing. Next topic, let's talk about security, because it's the most important part. Also, the over collateral, I noticed that there's a lot of mechanisms of IBTC that are designed to make sure the Bitcoin is very safe. And could you detail us that how do you make all the assets very safe?
So I think that the beauty of this design of InterBTC is that it is very simple, actually, right? The idea is very simple. We have Bitcoin and we don't have smart contracts on Bitcoin. So we need a way to lock and unlock Bitcoin based on some events on Polkadot, right? So when people want to mint IBTC, we need to lock Bitcoin. And when people want to go back from IBTC, we need to unlock Bitcoin. The only way to do this is by having people like you, me, somebody else, institutions to actually do the action manually, because we cannot write a smart contract. We cannot encode this into the blockchain directly. We need people to do this for the network. Now, obviously, how centralized solutions work is they take one person, right? One institution, and they do it and you trust them. That's bad. So what we do is we say, well, okay, let's allow anyone to do this for us. Let's allow anyone to make sure Bitcoin is locked. Now, without anything else, that would be even worse, right? If you now, instead of having, let's say, BitGo, which is a big reputable company, you would have thousands of anonymous users who you send Bitcoin to and you still trust them. And obviously, you don't want to trust random people on the internet. And this is where the small but very important trick comes in. We require these people, we call them vaults, to lock up collateral on the Interlay chain. And they lock up collateral in different assets, right? Like dots, maybe USDC, and maybe even centralized Bitcoin can be used as collateral. And then we have something on our chain called a light client. We have a Bitcoin light client. It's a program that follows the Bitcoin main chain. So it can verify that transactions happen. It's the same thing that you have on your phone, right? When you have a Bitcoin wallet, you don't download the entire Bitcoin blockchain because it's too big. You download a very small part, and then you can check that transactions have happened. The same thing is built directly into the Interlay chain. So that our chain, our network always can check, have transactions happened. And this allows us to now do the following. If our vaults, our network of vaults who are collateralized, if they misbehave, we can automatically take their collateral and use it to reimburse users. And that's the whole mechanism. This collateral is an insurance, right? If I'm a vault, I will provide insurance to users that I will not steal. And then users of IBTC, they know that, okay, I will put my Bitcoin there, I can use IBTC, and if I want to go back, I will always be able to do so. And if all vaults, all of the hundreds or thousands of vaults steal, in the worst case, I will get collateral. I will get paid out in different collateral assets, and then I can go and buy Bitcoin. So I can always recover my assets. And that's basically how the security works. And I know a lot of other bridges, they try to come up with like multi-party computation, zero knowledge proofs, like threshold signatures, trusted hardware. That's all great. But in the end, it does not improve. Like the game theoretic security is the best we can get. It's the same reason why Bitcoin works, right? Bitcoin works because you have mining, because you have a coin. It's worth something. And if you misbehave, you lose money. And that's the same reason Interlay, the bridge here, works. If you misbehave as a vault, you lose money. And that's the whole pillar of the entire Web3 ecosystem. And we can add all of these fancy tools, fancy new technologies to vaults, but this is extra. And the core security is really this game theoretic model. If you misbehave, Interlay chain will notice and you will be liquidated, you will be punished, and users will be reimbursed.
And I think the over collateral part is very important. So the quality of the collateral asset is very important. Why do you accept so much tokens to be collateral instead of select some very comparatively good ones to invoice the unexpected things happen?
That's a very good question. So right now at launch, IBTC supports DOT as collateral because DOT is the most liquid token on Polkadot. Everybody has it. It's very liquid. There's a lot of volume, so it's very resilient to use as collateral. And then what we do and what our community does for each new asset, there has to be a proposal to governance. And then community, we have risk teams. We have one at Interlay, and there are other community teams now starting to participate in doing analysis. And they look at the properties of this asset, the liquidity, the volatility, and then a few other properties to determine, okay, how much do we accept as collateral, or we can say we accept 1 million, 10 million, 20 million total, like as collateral ceiling, and then it stops. So like there's a balance across different assets. And then we also say, okay, well, what is the collateralization threshold? It can be 150%, it can be 200%, it can be even 500, 600% for very volatile assets. The lower the risk, the lower the collateral threshold, right? The less you need to put up, because we know that it will be enough. So for example, an asset that is highly correlated with Bitcoin requires less collateral than an asset that is not correlated. So if we were to take, for example, if we had a lot of native wrapped Bitcoin centralized, our community could suggest that we take a small part of that and use it as collateral, but the rate, it would only need like 110%, because both of them, both IBTC and WBTC, follow the price of Bitcoin. If we take Polkadot, DOT as collateral, we need a higher threshold, because we can take more because DOT is decentralized and we can allow much more of it, but we need a higher like threshold in case the price changes. So like for Polkadot right now, at launch, we have 260% over collateralization rate. That's quite high. But the goal initially is to be very stable, to have a very secure system. And with time, we can then start optimizing, making it more efficient. So there is a very careful process for adding each new asset, and then governance and community has to vote on it.
The next topic, combined with other Bitcoin blockchain tokens like Ren Bitcoin and W Bitcoin. W Bitcoin ranks all-time high, but its custody is not that decentralized. How do you trade off the decentralization, user experience? What is the most important thing for the mass adoption? Sometimes we all know that it's not so much decentralized, but it's the most welcomed ones. So it's very interesting. So how do you think all of these factors, decentralization, user experience, and security, what's the trade-off between them?
That's a very good question. The thing is that when you as a user, when you choose between WBTC and IBTC, there is not like, it's not more expensive to use IBTC. It's not more difficult. It's the same usability. It's actually a better usability. If as a normal user, like you and me, we're not institutions, right? We cannot simply mint wrap Bitcoin. This is mainly for institutions. You have to go through KYC, you have to get an account on one of their partner platforms, and only then you can mint. With IBTC, you come to the platform, you provide Bitcoin, you're good to go. It takes you 2-3 minutes, right? And then you send the BTC and it's done. So the UX is very, like it's better, if it's the same, if not better. Now, talking about decentralization, okay, decentralization often has a higher price, right? Often people say, well, it's decentralized, but it's more expensive, it's slower, but that's not true in this case. WBTC is on Ethereum, or let's say if it's for a Polkadot, it's on a blockchain, you pay the same fees. Even WBTC has higher fees right now than I think IBTC, or it's pretty much the same. And there is no extra cost to you as a user right now. In the future, there might be reasons for you to pay more for better services, for better security, but the goal is to make it your choice. It'll be parameterizable. But right now, when you have to choose purely between those two assets, there is no reason to go to the WBTC. The only reason right now is that wrap Bitcoin has been around for a longer time and that it has more integrations. But as IBTC integrations increase, as we increase volume, for the end user, there is no reason to go centralized. That's the whole idea. It's the same properties, it's fungible, you can use it everywhere. It's easy to mint, it's easy to redeem, which redeem is not that easy with WBTC because again, it's for institutions mainly. So I guess the argument I'm trying to bring is that for end users, there is no trade-off. The only trade-off right now is because IBTC is newer. But with time, this will also become, it will be the same, and then there is no reason to be centralized anymore. The difference here is for the operators, right? For the people who actually operate the vaults. For BitGo, for the centralized ones, how do they make money? Well, they charge fees, but it's not that much. Like people don't go back and forth very often. What they make fees of is markets. So there are suspicions that the big players who provide WBTC, they actually also are the ones who control a lot of it. They do market making, right? They market make, they buy, sell at big volumes, and they make profit of that, just like market makers on exchanges. But that's centralized. And of course, who knows what they're going to do, how they will market make. And if the big parties control the market, that's dangerous. With IBTC, we have a decentralized set of vaults. And here, vaults basically will have to make profits on fees. But the difference is that they don't necessarily market make, right? They offer a service to users, and the Interlay platform, from all the fees that Interlay as a chain will make, these will go to vaults. And that's why we're also building our own set of products, because that's how the chain itself, the DAO, the Interlay network, can generate revenue. right? Right now, we are not charging Akala, Moonbeam, or others for providing IBTC. Right now, the focus is to grow very fast and allow everybody very easy access to Bitcoin. But with time, what we will do is build up our own suite of products where users can very easily access and trade, and then the revenues from this will go to vaults. So that's the only difference, right? You have the fee model for vaults is more difficult because it's decentralized. And that's why we need to build our own products and basically have trading volume to be able to keep the whole network at a profit. Whereas in a centralized world, if you're WBTC and you're a big institution, well, you have a lot of power, and that's dangerous to users. For the institution, it's good. And that's the trade-off here. So decentralization has a price. In this case, it's not the user who pays it right now, it's the operators, and they're incentivized and subsidized by the network treasury. And with time, slowly, users will start paying, but they will pay for things they can do with Bitcoin. They will start paying for additional use cases, additional possibilities.
Next topic, Interlay envision a future where people could invest, earn, and play with Bitcoin on any blockchain. Now it's on Polkadot. What's next after Polkadot?
One of the next steps that we're going to do, apart from building out more Interlay, right, and building really Interlay from just a bridge to being a product system and to have products, the next step will be most likely to allow Cosmos chains to talk to us, because Cosmos has a very nice way to have a decentralized bridge. Similar to XCM, Cosmos has IBC. It's quite similar, with the difference that Polkadot has a shared security model. So we benefit that we're in Polkadot, and it's very easy for us to talk to Akala, Moonbeam, and so on. With Cosmos, we have to build like a point-to-point channel with like Cosmos chains. But the nice thing is we can add IBC as a library, and then our Polkadot chain, our parachain, looks like a Cosmos chain to Cosmos users, and then they can actually start using Bitcoin as well. And after this, obviously, long-term, I mean, you have Ethereum, you have Avalanche, you have Solana as very big contenders. The question for us is, how do we get Bitcoin there in a decentralized manner? We've seen a lot of centralized bridge hacks, and that's why we will tend to try to build decentralized solutions and use decentralized bridges. And the question is, which network will have a decentralized bridge first to Interlay? Snowfork or Snowbridge is being built on Polkadot. This is a decentralized bridge between the Polkadot ecosystem and Ethereum. So once that is live, obviously, IBTC will become available to the entire Ethereum community, and we'll also be able to use Ethereum assets like Ether as collateral and allow people to mint IBTC using Ethereum as collateral. And that's basically how we will proceed. Of course, if IBTC users want to use centralized services, it's up to them, right? The whole idea is that it's your Bitcoin, you can do whatever you want. Our focus will be in providing decentralized services, but there are many, like there are big centralized bridges as well, which you can use if you want to, like Wormhole or multi-chain. And if users want to, they can also use those to go to other ecosystems even sooner, right? In theory, within a couple of weeks from now, you could already have a bridge to Solana and bring IBTC to Solana through Wormhole, which is arguably a not fully decentralized model. But if our users want this, they will be able to do that. That's the whole idea of IBTC. It's free to use. You can do whatever you want.
Why do you choose Polkadot as your first station?
We actually started on Ethereum. So the first designs and the first paper was focusing on Bitcoin to Ethereum. And we actually wrote the smart contracts. The issue is that, one, it's very expensive to store data on Ethereum. It's very expensive to verify Bitcoin on Ethereum. That means that our users would have to pay high fees constantly. And especially in the beginning, when there's not high usage, fees would be higher, or we would have to subsidize a lot of costs. And the second point is that Solidity is a nice tool. It's like a Swiss Army knife. It can do everything. It's very easy to use. But if you want to build a complex system, like if you want to build a house, right, using the analogy, right, you're not going to use the Swiss Army knife. You're going to get proper tooling and actually do for the difficult work. And that's exactly why we went with Polkadot. Like, we need to work with Bitcoin. We need to verify Bitcoin transactions. We need to verify signatures. That's low-level stuff, which is not easily built in Solidity. Solidity is nice for application level things, but not for infrastructure, I think. With Polkadot, we can actually, we use Rust, right, the substrate, which is much more robust, has better testing, has a much, much bigger development community, right? Rust is not Web3 specific. Rust is a language that is used globally for different applications. Facebook uses Rust for their platforms. So you have a big developer community, very good tooling, very robust tooling to test and verify that the software is stable. And it also allows us to use Bitcoin Core libraries, right? We have Bitcoin libraries that are maintained by Bitcoin Core and that they're written in Rust or have wrappers in Rust, and we can use them and avoid rewriting everything in Solidity, which is dangerous. We've seen that some projects have tried that and there are issues, right? I mean, bugs can happen always, right? We've had bug reports on Kintsugi, on the Camry network, and that these were fixed, and they can happen with any language. But it's much, much easier to make bugs with Solidity because it's so easy to use. You don't need to learn much. You don't need to be like a very experienced developer to start. But then it's very dangerous to make mistakes because it is, in my perspective, not meant for like infrastructure level development. And that's kind of one of the reasons why we started with Polkadot. Also because Polkadot is one of the only chains, I think, wanted a decentralized bridge. Most other chains were like, okay, let's get Bitcoin as soon as we can, as fast as possible. And I have to credit like Polkadot. They came to us and say, hey, we want a decentralized bridge. It might take longer, but we actually want to have a decentralized solution. And for that, we respect them highly. And I think we'll also agree in terms of the vision that it has to be interoperable and decentralized. And that's why we kind of committed to building on Polkadot.
Another question, deploying on a smart contract chain seems much easier than running a parachain of yourself. Why do you still choose to run a parachain independently?
I think it's the same argument as before, right? With smart contracts, you basically are a client of another smart contract platform, and you can use the tools that platform offers you, and you're very restricted. Right? Like a lot of things that we do on Interlay, we cannot do on Ethereum. We do like, especially on the cryptography side, we do key derivation. We use crypto tools that make the platform more secure, more efficient. We don't have them in Solidity. We'd have to build them from scratch, and it's very complex and expensive. So with the standalone chain, you can really customize. You can optimize for your use case and build what you actually need, and then you still talk to others, right? That's the beauty of Polkadot. Right? We build a specialized chain for Bitcoin, but we can still talk to Akala and allow our users to go to Akala, which is a specialized chain for like DeFi and stablecoins and trading, and Moonbeam, which is a specialized chain for Ethereum-like applications. And the movements back and forth are very easy for users. So you kind of get the best of both worlds. You can specialize, but then you're not isolated. You can still talk to other platforms. So that's kind of the main reason for having a standalone chain. And as you will see, a lot of the bigger players from Ethereum from like 2017 that are still around and successful, they're now switching to build their own chains, either a roll-up or a separate standalone chain, because it is more efficient, right? Once you have the users, it makes sense for you to become independent and to start customizing.
Okay, great. Let's talk about the future plans and any product and market plan to share.
So as mentioned before, we will be pursuing 3 avenues essentially over the next couple of months. One is to bring Bitcoin to all Polkadot parachains. Here we already are live on Akala, Moonbeam, A-Star, and Parallel all already in the pipeline. They will be happening over the next weeks. And from there, we'll be doubling down on integrations and really trying to build up a good, interesting set of use cases. And then as other parachains come online, there's a whole pipeline of other integrations coming towards the end of 2022 and also 2023. The second one is to build this product suite for Bitcoin on Interlay directly. This means simple trading and lending and a secret product that I cannot yet reveal, but that will allow us to scale IBTC liquidity much, much faster and allow users to hedge Bitcoin risk, will be coming to Interlay. And then the third avenue, which is more on the integration side, is, as mentioned, we will be exploring integrating with the Cosmos ecosystem at first, and then we expect the Polkadot Ethereum bridge to go live towards the end of this year, beginning of next year, and that's when we'll also then add support for Ethereum. So these are kind of the imminent next steps. And one interesting use case, I think, that we're looking to explore, apart from obviously working with institutions and end users, is working with DAO treasuries and DAOs. A lot of like a treasury has often like a big fund of its own tokens, right? And there's a lot of recommendations, and we're quite aware that having your own token in your treasury as the only asset is risky, right? Because it's not really like you have money in the treasury, you have an unauthorized equity, right? These are like shares in a big company that are authorized but not issued. So the risk here is obviously, as the price of your product fluctuates, you have very much exposure to your own product and your own network. And that's good if it goes up, right? If everything is going fine, that's great. Like it's increasing in value and you can basically do more incentives and you can pay for more grants. But what happens if it starts going down like in a bear market? And that's where you basically suddenly see your treasury decline. And we've seen, for example, a lot of treasuries, including Luna, trying to diversify into Bitcoin. Because Bitcoin, as mentioned, is the largest liquid asset. It has a very interesting movement in terms of price compared to other crypto assets and generally the financial markets. But the question is, how do you hold it? How does a treasury, how does a smart contract DAO get Bitcoin, right? It's very difficult to hold Bitcoin in multi-sigs because you need to choose people who need to be de-anonymized, or they need to prove to you that they are honest, they hold the keys, and it's messy and it's centralized. And with IBTC, suddenly you can hold DAO. As a DAO, you can actually have BTC, you can diversify into Bitcoin in a fully decentralized manner. And the best thing is, if the Interlay network loses the Bitcoin, if you as a DAO cannot exit into BTC, you'll be reimbursed in collateral. And the most interesting bit here is that typically DAOs, they will never go back to actual Bitcoin on the Bitcoin blockchain, right? Because again, the moment you need a Bitcoin wallet, you need multi-sigs, you need individual members of the DAO to be selected to hold the multi-sig. So for DAOs, they will always hold Bitcoin as IBTC. They have no reason to go to the Bitcoin chain itself if the DAO is somewhere, is like on Polkadot. So for them, it's mainly a diversification in terms of price exposure with insurance built in, right? You know that this thing, the Bitcoin asset, cannot be stolen. If you're trusting someone, they might lose it and your entire treasury is valueless. Like look at what happened to centralized bridges. So this is definitely one of the more interesting use cases that we're exploring right now. Of course, it needs more liquidity. It's going to take time, but we do believe that for DAO treasuries and also DeFi applications, IBTC with its decentralized and over-collateralized model is the most interesting Bitcoin asset. And the reason is when you compare IBTC with a centralized Bitcoin, for day-to-day trading, right? If you're making one Bitcoin, one trade, if you're buying Bitcoin and selling it instantly for like an arbitrage, I guess it's probably fine to have the centralized version, right? Why? Because the probability of the centralized Bitcoin breaking in exactly these few minutes, it's quite low, arguably. However, if you have long-term exposure, if you're a DeFi app like Akala, who is, for example, lists Bitcoin as AUSD collateral, you have to make a long-term risk assessment. And long-term things might happen. And we know that if something bad can go wrong, at some point, it will happen, right? And this is where IBTC shines because you have a much more secure model, which allows you to avoid this risk for the long term. And hence we say IBTC is the Bitcoin for DeFi applications, DAOs, and long-term DeFi users, people who want to stay in DeFi for a long time.
As our interview drawing to the end, anything else to remark regarding Interlay, regarding Polkadot, Web3, anything else?
I think, one thing to point out, I guess, is that we're trying to really increase our work in educating the Bitcoin community about generally Bitcoin itself, but also what the future of Bitcoin could look like. And obviously also talking about exploring new use cases for BTC and how people can use Bitcoin outside of the Bitcoin blockchain in a trustless manner. So we've started a weekly, bi-weekly series of Twitter spaces, which will likely turn into a podcast with a lot of people from the Bitcoin community, people who are working on Bitcoin, trying to improve it, and it may be making it more sustainable in the sustainability area, or focusing on privacy, focusing on interoperability like us, and trying to really provide a platform to educate both the DeFi community about what's going on with Bitcoin, but also Bitcoin users about what's going on in other communities. And last but not least, we will be at Adopting Bitcoin in El Salvador at the conference to actually educate people there and present how they can use BTC in DeFi and really try to then start expanding into the communities in Latin America, because that's where I think crypto is seeing the most adoption as of now.
Great. I think that's all for our interview of today. And we've covered a lot, but I think there's much more to explore, but PolkaWorld will keep tuned to Interlay and help more and more people to get to know Interlay more. Thank you so much, Alex, for being here today.
Thanks for having me. It was a pleasure.